Thank you. Thank you very much, and thank you for inviting me. I wanted to offer a few personal remarks on the role of the banking system in economic activity. And others have said it, the banking system has been quite successful in catering for the liquidity needs of the economy in the past year. But the key question going forward is the banking system ready to provide the credit that will be needed also without those support measures? And I think one can think of two types of factors when one assesses, say, the intermediary function of banking systems. I think there are factors within the banking system itself, the financial situation of the banking system, and there are factors in the economic environment in which the banks operate. And I wanted to touch on those two types of factors briefly. Now, on the first, when thinking about the ability of banks to support the economy, of course, the first thing that comes up is bank capital. Now, in any economy, bank capital is obviously crucial to absorb losses, but also to provide the space for new lending. And there's a lot of literature on this. There's recent work, for example, at the people at the San Francisco Fed that have shown that banking systems that are more strongly capitalized tend to be associated with stronger economic recoveries. And that's a finding that applies to, say, a long history of macro level data over, I think, more than 150 years. And it kind of squares with work that we have done at the ECB, looking at micro data, at bank level data, published in our recent financial stability review that shows that banks that have more space above the minimum regulatory requirements tend to curtail their credit supply less in downturns than banks that have less space. So that is, I think, that's important. And what does it imply for Greece? Well, of course, in Greece, others have said it, there is the NPL problem has put pressure on capital, and that is a process that will continue. It has been, that process has been successful. That has also been mentioned. We fully agree with that. But that may continue to put some pressure on capital. And on top of that, of course, we have the new NPLs. We don't really know yet how much that would impact capital, but that's another an open question. So the question then is there enough capital left for new lending going forward? Now, I think the answer to that question depends on a range of factors. It depends on the capital implications of NPL reductions going forward. It depends on the evolution of credit risk. It also depends on the extent to which banks increase capital going forward. And we've seen recently that in a number of large banks, they've been able to attract fresh external capital. I think that's encouraging. It's good to make use of, say, favorable market conditions to strengthen those buffers. And it would, of course, ideal if that extra capital is supplemented with also internally generated capital going forward, which requires not just an increase in profitability, but I think it's also important to strengthen, say, that increase in profitability is driven by, say, more permanent recurring factors to make it more sustainable. So that's about capital. Then the other prerequisite for lending is obviously liquidity. Well, I can be very brief on that because it's clear that liquidity is not an impediment for lending. We've seen, because of the ECB monetary policy accommodation, we've seen an increase in the deposit base in the banking system. That is not a problem going forward. So now let me move to the second set of factors, the factors, say, in the economic environment of banks. And there, I agree with others that significant progress has been made in strengthening the economic environment in which banks operate. Crucially, the Hercules scheme there has enabled banks to clean up their balance sheets, and that's important that continues in our view. And then there are a number of priorities going forward that I think we've been discussing, and the authorities are very well aware of that. So an effective and timely implementation of the insolvency code is crucial. Stepping up of the payout of called state guarantees. It's a backlog there that needs to be that is being addressed, but it needs to make further progress. And of course, a fully functioning debt enforcement process is crucial for a credit mechanism, for a financial system to work properly. Now let me mention one specific area in the economic environment that I think is important, and Paolo also referred to it, which is the SME sector. I think we still see signs of difficulties in access to finance among small and medium-sized companies. We have a survey together with the European Commission, appears twice per year, the SAFE survey on access to financing for enterprises, that shows that this is a consistent problem among small Greek companies. And this is kind of in line with the observation that bank lending rates, interest rates, are persistently above those in Greece, are persistently above those in the euro area, especially for smaller loans. Now, that's not a surprise, given that there is a credit risk there. It is small companies operate in a difficult environment, and it is important to address that, to address the impediments to growth of those companies and to strengthen those. And the Greek authorities are very well aware of this, but I think it's important to emphasize that. It is important, and it is not just, and that's another thing I want to emphasize, not just a matter of the quantity of lending here, but it's also important to think of the quality of lending. Lending needs to focus on viable firms rather than non-viable firms, because that will create problems only down the road. And therefore, a well-functioning insolvency regime is extremely important. So to conclude, I think a lot of progress has been made. Some more things need to be done to strengthen, to fully restore the functioning of the financial system without policy support. I think the key to unlock, let's say, that virtuous circle between the banking system and the economy remains for banks to continue to further clean up their balance sheet and to strengthen their capital and their profitability position. These two can go hand in hand. But that virtuous circle runs into both directions. There is also the economic recovery that can help banks to address those challenges. And I think especially the RRP has been mentioned, can play a very useful role there and can be very helpful in addressing those concerns. Thank you.